Hi guys, I'm just going to talk about the short setup that I took on NQ in New York session yesterday. So, as always, first things first, this is not financial advice. Everything I say or do is mainly for educational purposes. So, please do not take my words out of context. Okay, so going on, um, it was Friday and we had PCE. And in the last video, I talked about how I categorize each economic event. So obviously, I classify PCE, PPI, and FOMC statements as medium impact news events. So I do not trade the session prior until the news release. So going into Friday, my expectation was lower prices, and we had PCE. I wasn't going to engage in London session, so I was going to engage post PCE. So having said that, going to the charts, daily time frame. So on Thursday, I posted in the community tab that I wanted to see that I would like to see Wednesday's high get run by Thursday's candle, which we did, and that happened a bit too aggressive because if I'm going to take a short on Thursday, I don't want to see price open here and trade all the way higher. That just invalidates any form of short framework for me. Although I could go into the market looking for a more conservative approach, but in this case, it just didn't make any sense to me for price to go this high. And when I saw this, I just automatically was not interested anymore, right? So what did Thursday do? So Thursday traded higher and we properly engaged this high. And at the same time, we were engaging this high as well. So taking this off, taking this off. And the weekly opening price, which was here, weekly open. And yeah, we engaged this high and we closed back below it. So I'm not going to be looking for longs, continuation longs, when we have these consecutive candles into a relevant level. And I'm not going to be looking for continuation longs when Monday or Tuesday makes the low or the high of the week, because I'm always expecting Friday to trade back into the range. I'm not expecting Friday to expand if Monday or Tuesday made the low or the high of the week. That can happen. Friday could as well still continue to trade higher, but that's not something I want to see. And if that happens, I just stay away from the market. So going into Friday, which was yesterday, we closed back below this relevant level. So that gave me insight onto what I would expect for today. And in the community tab, I posted that I wanted price to remain in the lower half of this level. So if we had traded to the 50%, that would have just been a low probability framework for me. I probably would have still engaged, but it would have just been more of a low probability. And just like I always say, you want small wicks. You don't want to be trading, you don't want price to open up and trading all the way higher so you can frame trades. That's not something you want to see. So going down to the 1 hour chart, what did we have on Thursday when we engaged that level? We had a change in the state of delivery here, and we had this expansion to the downside, leaving what? Low resistance lows. So ideally, you do not want to be longing away from this. You want to be shorting towards this. So we had that, and going into Friday's open, Friday opening price, we opened there, and ideally, whenever the market opens, you're looking for price to open, trade higher, create a high, and then position yourself around any of these areas to frame an expansion to the downside. So I will not engage if price opens and starts trading lower first. Like, I am completely not interested with that. I want to see price open and trade higher if I'm expecting shorts. If I'm expecting longs, I want to see price open and trade lower first, engage a relevant level, then I can frame longs. So we opened on Friday and we started trading lower. That's very uninteresting to me. So when we got to this point, I noticed we were in this range from that high to this low. This off. All right, and we had PCE, right? So going into New York, we had this, London was more of a range. So my anticipation for this daily range was we'll probably get a New York reversal profile because London ranged. And whenever London ranges, you can expect New York to engage London's high or London's low. So going into New York, we had this range. Price engaged the high, going to the 15 minutes. Price engaged this high at 8:30. So this was PCE. PCE got released and we had price engage this level, which is something that I really like to see. So when that happened, there was really nothing to frame from this 15 minutes time frame. As you can see, we have this consecutive up close candles, and that's too far in this range. So if I'm going to be waiting for price to close here, I don't have enough range to target. So I had to go to the 5 minutes time frame. So going to the 5 minutes time frame, there is a much more clearer framework here. So we had price engage this level and we had this close below this down close candle, but it was pretty small. So I went down to the 3 minutes time frame, and the 3 minutes time frame is basically the lowest I would go to frame trades on continuation days, because reversal days I would never try to catch the high or the low of the week from a 3 minutes or 5 minutes time frame, right? So if I'm going to trade a continuation, I can be more aggressive. If the framework is favorable, I can be more aggressive. Hence, I took a position once we had this close. I took a shot here in the open of this candle. I took a shot immediately this candle opened and I had my stop loss here. So the thing about stop losses is stop losses have to be placed at invalidation points, right? So you don't want to take a trade and start um, immaturely start moving your stop loss up, down, wherever you want to put it. It's called an invalidation point for a reason. So price has to take me out of this trade before I would consider this invalid. If I'm taking a trade, I'm expecting three things to happen. It's either I'm going to come out of the trade with a loss, or I come out of the trade with a large win, or I come out of the trade with a small win. I will never close my positions immaturely. I would never do that. So my stop loss was here, regardless of this move, my stop loss was protected. So we traded all the way up to that level, and I sold in this candle, just like I said, stop loss here. And when this happened, right, this was pretty much a sign that this move is likely going to be a high resistance move. So that was pretty much going to be a high resistance move because we had this deep retracement. So I expected this to be very difficult to reach a draw on liquidity. Hence, I was very aggressive with my trade management. So I took something off at 1:7, 1:1.7, because it was Friday And based off how we retraced, price could have easily still traded back higher and still take this high out before dropping. So I needed to be really aggressive in this, right? So I took off something at 1:7, and unfortunately, as you can see, price retraced and came back to take my stop loss at break even. So as you can see, the framework still played out, but this is not. This is really this is really rough. This is dirty. This is not the kind of price action I want to be seeing or I want to be participating in. But nevertheless, the framework was there. So I ended up coming out of that trade with a small win. And let me show my executions. Okay. So as you can see, on the 3 minutes, this is the 5 minutes time frame. So somewhere in the 3 minutes time frame, I sold in this candle. So yeah, it took something off at 1:7, and as you can see, price came back and hit me out, which is fine. So overall, I had, excuse me, I had a good week. I wouldn't say extraordinary, but it was a pretty much fair week for me. So um, I'm not going to talk about my expectations going into next week. I'm going to talk about that probably tomorrow, being Sunday, or Monday morning. So with all of that being said, yeah, I'll see you in the next one.